In this episode, I'm going to talk about the unemployment rate because we've seen the first rise in unemployment since we've started lifting interest rates and since COVID has come about. My name's Adam Panisi. I do property development full time. I've been doing that for over a decade, and I help other people do their own property development deals and property investment by using my knowledge and my skills. And one thing I look for, especially now that we're rising interest rates, is looking at the unemployment rate, because that's going to be a big factor among other things such as spending and such as the target inflation rate. But all of these things contribute to the overall economic health of our economy. And after reading various different media articles over the last decade plus and witnessing certain cycles, I have learned to educate myself and look at the true statistics and interpret that myself, along with paying for other subscription services and economists even smarter than myself. But one thing to take into account is the unemployment rate has risen, and it's only risen very marginal. The data was only released just very recently. So you can see that it's risen to 3.5% in August 2022. So I am expecting that it's going to rise again in September. The number of job adverts has declined as well. I'll show you that in a sec. But you can see from this release, which was a public release from the Australian Bureau of Statistics, is that we got 3.5%. It increased by 1.1 percentage points in August, and it's returning to the same rate as June. I expect that in September, we'll probably have even a bigger increase to unemployment now that everything's sort of starting to come off the boil. Then it goes on to talk about employment and hours worked, and it gives you a nice graph. But ultimately, all you're concerned about is that the fact that it's moved slightly. Now, one other thing which I wanted to point out is that there's a record number of people with multiple jobs in the June quarter. So although our unemployment rate looks impressively low, there are a lot of people with multiple jobs. Obviously, it'd be multiple part-time jobs. It's just a consideration, one thing to take into account in our overall economy, that all of this unemployment, and I've heard economists talk about this previously, that the low unemployment rate isn't a true reflection of the economy, because it does also account for people with part-time jobs. So the fact that there's a record number of people with multiple jobs may not actually mean that the unemployment rate is as low as what people perceive it to be. So enough said about that. I thought this article was interesting, and one consideration to make is that our immigration is now starting to ramp up. Now, this is a rolling graph, and it'd be nice to get some true data as to monthly statistics on how much we're actually introducing with migration and what impact that's having, both skilled and unskilled labor. And I'll show you a chart in a sec where it talks about Department of Home Affairs has a table around how many skilled and unskilled target immigration that they're working on for the next 12 months. So it's interesting. This is going to ramp up, and so will unemployment, because as we bring more skilled labor into the country, it means our unemployment rate is going to go up. Sorry if that is you, if you're part of that unemployment, but with 3.5%, it's obviously historically low. It's one of the lowest figures we've seen for like the last however many years, 40 years, 45 years. So we've got extremely low unemployment, around about where we were sitting prior to COVID. Around that 5.5% unemployment is a reasonable figure to expect that we'll probably get back up to. So I thought this graph was interesting, that we are starting to ramp up migration. There's talks of 200 to 250,000 people per year in this migration, but the program itself, this migration program, which is from the Home Affairs Department within the government, talks about us introducing skilled and unskilled, or skilled and family places, I should say. So if you just look down, I mean, this target was set in 2021, or even probably before then. You can see the skill total is 109,000 is what they're projecting for this year, and then 50,000 family total. So I do expect that they're going to surpass that, because we haven't hit the 2021, 2022 figures. And I expect that we'll probably get a lot more people into this country than what this is anticipating, so that we're going to be able to fill skills shortages. It means that things like, especially construction at the moment, if you're in property, if you're in building new properties, that it is difficult to get a builder to actually complete the works because there's not much labor around, just generally speaking. And then off the back of that, there's obviously still the material supply chain issues, which we're still experiencing even to this point. And originally, I thought we were going to start to ease by the end of this year or early next year. That was what I thought at the start of this year, start of 2022. I thought by the end of this year and maybe into 2023, those supply chain issues would ease up. They haven't. They don't look like they will, probably for a little bit longer. Even just on a job that I'm doing at the moment, there's been an extra month delay just on the flooring. And that's a material that should be easily accessible within, well and truly within that time frame, considering it was booked in advance, well in advance of the extra month delay. So just to get material supply is still an ongoing issue in the industry. So once we start to bring over those skilled labor, at least it'll ease up our labor issues in the construction force. And not just with construction, but obviously other industries. It unfortunately is going to put downwards pressure on wage growth. So that in itself isn't going to be good if you're working for somebody else, and you're going to have obviously more competition with skilled migrants coming in. But that's what our economy is about. We introduce in Australia, we introduce migrants, it grows the economy. And especially construction adds a significant amount to our GDP overall. So it's not going to be like this forever. We are going to have interest rate rises that are going to be short-lived, I believe, and I think that they're going to back off the pedal a little bit. It'd be interesting to see where the unemployment rate ends up for September, and they probably have access to that data before it gets released to the public. I would expect they would. So they already would have been aware of this 0.1% increase in unemployment, and that may be a little bit higher next month. There's probably still going to be another few interest rate rises, at least. They may not be as severe as the previous ones. And public announcement by the RBA, not that I believe anything that they say anymore, and didn't before that anyway, but public announcement talks about them backing off the pedal with the interest rate rises. So just gear yourself up to go and buy some property. There's still some great buying opportunities now in the marketplace. I think we probably haven't hit the bottom of the market for some areas, but in saying that, there are still plenty of areas in undersupply that are well and truly affordable, and there's buyers that are cashed up. Those areas I haven't seen come down. The areas that I'm currently active in, I haven't seen them in terms of pricing. I haven't seen the price come back. I've seen the quantity, the volume of transactions ease off, but in terms of pricing, that hasn't really changed. If anything, some of the areas that I'm in are still etching up in terms of pricing. So it does come down to your type of property that you have, where it's located in an area. Just because an entire market like Sydney or Melbourne is declining, or I read an article about some coastal areas coming back in places, and I own properties in those coastal areas, and mine have grown by 5 or 10% in the same period, but that media article said that they've declined by 5 or 10%. So it's interesting, depending on what type of property you own, depending on where that's situated within the greater community and what the supply is. People still need a place to live. We're still in massive undersupply countrywide. And in particular areas, there's extremely low vacancy rates with properties to rent. As I'm sure you would have read from a lot of the headlines, there's low vacancy rates with properties to rent. There's hardly been any building in the last little bit compared with the demand. And that's now eased off. And until the material supply chains come and ease off a little bit more into 2023, we're going to see those vacancy rates go even lower. We're going to see more rent increases. Unfortunately, for those people that are renting, we are going to see more rent increases off the back of undersupply and also off the back of interest rate rises. And once we've sort of experienced all of that in the next 6 to 12 months, then be prepared that interest rates are going to come back and we are going to see round two of the property boom, the one that we should have had instead of our COVID property boom. So just gear yourself up. The next property boom will be off the back of undersupply. It will be a proper construction boom, which should last for 2 to 3 years. And over those 2 to 3 years, in some pockets, we are going to see, I truly believe, we are going to see a 50% growth in some pockets. I know that's hard to believe, as some areas have grown already by 50%, but maybe some of those areas are coming back off the boil. But don't be surprised if we do have some pockets that are undervalued, where we are going to see that 50% growth. Keep in mind as well, we are at the point where we've got record number of baby boomers retiring, and those baby boomers are retiring to certain areas. So don't expect we're going to see a halving in value in coastal areas, at least not this cycle. That is probably coming in the next maybe 4 or 5 years. I think we might see a proper correction, but it's not going to be this time. Thanks for watching. If you got any comments or if you like the video, please subscribe, like the video, send me a comment. And if you want to know more about this video and other things that we're doing, please let us know as well. Thanks for watching and have a great day.